معرفة.
Bismillah ar-Rahman ar-Rahim. Now let us discuss about Islamic credit cards. We will discuss two structures in Islamic credit cards. One is we will discuss about the Ujrah based structure, and the other is we will discuss about the Tawarruq based structure. Now to start with, let us understand the Ujrah based structure. Ujrah means a service. Now basically in this structure, the customer enters into a Sharia compliant loan contract with the Islamic bank, and the Islamic bank provides the limit of the loan. So for example, if the limit which is provided by the Islamic bank is $100, which means the customer is entitled to receive $100 as a loan, but the customer will not pay any fixed interest over the $100 taken as a loan. So there is a Sharia compliant loan contract which is entered into, wherein the Islamic bank makes an agreed amount available as qard or as a loan to the customer. Then the Islamic bank issues a credit card to the customer, and there is that agreement is a service ijara agreement basically, and the customer pays a fixed monthly fee to the Islamic bank for providing those services. Now what we need to understand is that irrespective of the usage of the customer, the fee which is charged by the Islamic bank does not vary, it is fixed. So basically in an Ujrah based card, a fixed service fee is charged by an Islamic bank to the customer. Every month the customer pays a fixed service fee to the bank, and there is an amount. Now let us discuss about an Islamic credit card. Generally there are two structures which are being used to structure or issue an Islamic credit card. One is an Ujrah structure, which is called as a service based structure, wherein the customer approaches the Islamic bank, and the customer enters into a loan agreement with the Islamic bank. So this is a Sharia compliant loan which the customer enters into with the Islamic bank. Why I call it a Sharia compliant loan is because in this agreement there is no interest charged by the bank to the customer. So if the customer enters into a Sharia compliant loan, the bank provides a facility of, for example, $100 to the customer, wherein the customer can use that $100 and return back the $100 to the bank. What the bank charges? So in the first step, there is a loan agreement which is entered into between the customer and the bank. Now the bank issues a credit card. Now this credit card could be used by the customer to make payments, and for providing this credit card and the other services, for that whole package of the services, the Islamic bank charges a fixed fee from the customer, which the customer is supposed to pay every month. Now this fixed fee is not related to how much the customer uses the funds. So if the customer has entered into an agreement of $100 and the customer is not using those $100, still the customer has to pay the fixed fee to the Islamic bank. Irrespective of the usage, the customer has to pay a fixed fee. So basically this is called as an Ujrah based structure, wherein a customer pays a fixed fee to the bank irrespective of the usage of the fund facility which the bank has provided to the customer. So now let us discuss about another structure which is based on a Tawarruq or a commodity murabaha structure. So a customer approaches an Islamic bank. The customer wants an Islamic credit card. The customer enters into a Tawarruq contract or a commodity murabaha contract with the Islamic bank. Now if the limit which the customer wants for the credit card is $100, they enter into a commodity murabaha for $100. So based on that, the Islamic bank purchases Sharia compliant commodities of $100 and sells it to the customer for $105. So the customer is supposed to make $105 payment in the span of, for example, 2 years. The customer does not need the commodities. The customer sells the commodities to a third party and the customer receives the payment. And this payment is deposited with the Islamic bank, and the Islamic bank deposits this amount of the customer in a Mudaraba savings account with the Islamic bank. So whenever the customer wants to avail that fund is linked to the credit card. So whenever the credit card is being used, that fund which is in the customer's account with the bank is used. And whatever is remaining in the Mudaraba savings account, the account of the customer, that investment, that funds are being invested by the Islamic bank in Sharia compliant businesses, and that also generates certain profit. And because there has to be a periodic payment, and generally, as we are aware that in credit cards, there is at least 5% of the payment to be done on a monthly basis. So what happens is that the customer is obliged to make at least 5% of the limit amount to be paid on a periodic basis, plus the profit portion, which in this case, for example, was $5, a portion of that needs to be also paid on a monthly basis to the Islamic bank. And as the duration of the card was for 2 years, and after 2 years, the customer needs to make the whole payment. So basically, this is how a tawarruq or a commodity murabaha structure is used to provide an Islamic credit card.